This is Brad Wolff, and this is the end of day Emini review for August the 3rd, 2022. So as you can see, output at the top, double bottom, then small pullback bull trend, and on the open, the market rallied. It formed a double bottom with this low or this low, and then rallied in a small pullback bull trend for the rest of the day. And what's important to first notice is the amount of bull bars we had on the open. While this was a parabolic wedge, you can say it's 1, pullback, 2, down, 3, or you can say up, down, up, down, or excuse me, up, down, up, down, up. It doesn't matter, it's the same forces. You could say this is the wedge, up, down, and up. Either way, it's a trend. It's a by the close rally. Usually there's an 80% chance that the first rally will reverse and get a minor reversal, which was here. This bar was a big enough surprise. The odds favored at least a small second leg. It's important though, these two bull bars were disappointing enough and the market was holding above the moving average that the market was more likely to go sideways and maybe test the open. Here, it was a it's a high 2 buy with a double bottom, so it's a second entry short. Here's the first entry, here's the second entry, and here's the double bottom. You can also call it a micro double bottom. Bulls would buy. They could buy above here or above here. Both of these bars are closing on their highs. They could wait and buy above this bar. Here, it's a bit of a problem because you have a wedge. 1, 2, pullback, 3. So the odds favored more trading range price action here. The important thing to note is this is a micro channel all the way up to here. And even though the market went below this bar here and ended the micro channel, it formed another micro channel with these 3 bars. So the channel is very tight and the bears are not making money. The bulls got a breakout and follow through and a few legs up. Bulls would get out below here and possibly wait for a couple legs down and a retest of this measuring gap. However, if they did get out, they'd have to get long again above this bull bar. And it was an inside bar here, so traders could buy somewhere in this area or above this bar. They could wait for the breakout and follow through and buy above this high or buy above this high. Al did mark this high because it's a wedge, 1, 2, 3, and the odds favored a couple legs down. Also, you have the problem of the moving average up here, which you can read that the odds favored price closing below the moving average. It's two-legged pullback. Traders could buy this high, but again, you have the issue of 3 consecutive bear bars. Might get a small second leg down. Traders could buy above these highs, betting on the second leg down. And even if we go below, it'd be a 20 gap bar buy. But the issue is, again, we're probably going below the moving average. So probably not going much more up. But bulls will buy above bull bars closing on their highs because it's a small pullback bull trend. And they know the worst case, the market will go sideways. They can buy above here. They can buy above any of these bars closing on their highs. If they bought this high and they see a hesitation bar here, they may be quick to get out below this bar or get out back at break even. Bears, some bears will sell. It's aggressive. This is mostly bulls taking profits, getting out, betting the price is going to test the moving average. And this is no different than over here. Bulls will buy. They'll buy above bull bars closing on their highs. And when the market doesn't immediately go up, they'll get out quickly with a small loss or below this bar, betting on more sideways. Bears, they'll sell here. But again, when the market doesn't sell off quickly, they'll be quick to get out. Same thing here. Bulls buy and it rallies to a new high. They'll get out below here. Aggressive bears will sell. Overall, it's a trend from the open. Well, it's a small pullback bull trend day is what I meant to say. And when you see a rally that is this tight, it's important to just buy and buy for any reason. Don't look for sells because all sells are going to be minor. Everything is going to be minor and probably lead to sideways or up, which is why bulls are so willing to buy below bars.